What's going on, Fud Nation, and welcome back. Today, we're going to have a very exciting conversation with Ali Madhavji, who is a founding member of the Blockchain Founders Fund and a managing partner over at one of the most influential venture capitalist organizations here in crypto land. I think today's episode is a phenomenal look inside the brain of one of the biggest capital allocators in our industry and someone who you can definitely learn from if you want to learn how to better approach your own investments in cryptocurrency. So I sincerely hope you enjoy this episode. I know I certainly did. If you're excited, throw a like on this video and get ready for another phenomenal conversation here on FUD TV. Welcome to FUD TV. Ali Madhavji of Blockchain Founders Fund, one of the more prominent VCs here in the crypto and blockchain industry. How are you doing, Ali?
Great. How are you doing?
Very well. Thank you so much for coming on FUD TV. I cannot wait to pick your brain and hopefully take your understanding of how to approach investments and how to approach this nascent industry and share that with the audience so that they can learn a little bit about how a professional investor in the space thinks and things, of course, that you're interested and that you're looking at right now and that you're excited about. So those are the things I'd love to talk about, and I'm very excited to share it with the audience.
Absolutely. Happy to, and thanks for having me on the show.
Of course, of course. So let's start with some fundamental background here. Can you introduce yourself a little bit about your history, your background, and how you came into the blockchain and crypto space?
Yeah, absolutely. So, Ali Madhavji, as mentioned, I started off my career at PwC, actually in Toronto, and then moved into corporate turnarounds across North and South America. So, helping companies that were about to go bankrupt return to profitability. From there, I did an MBA at INSEAD, did a short stint at PayPal on the strategy team in Europe. And then from there, I actually helped to lead strategy at INSEAD, which is a leading business school globally. Well before this, had invested into crypto, but entered as an entrepreneur with the idea of a crypto exchange in late 2016 and 2017, where we raised several rounds of capital. And then I exited that in 2017, at the end of 2017, and formalized Blockchain Founders Fund, which had already been making investments prior to that, but formalized the fund. And then now we also invest out of Loyal VC, where we're an LP as well. And then we also work with the United Nations, helping to write one of the flagship reports for the UN on emerging technologies and looking at how emerging technologies, including blockchain and crypto, can help alleviate poverty and achieve the UN Sustainable Development Goals, and a number of other things as well.
So, I mean, that's quite a span of different expertise and different areas of interest. Usually you find people who are, maybe they're big into fintech and they kind of stay in that world. Maybe they're big into, entertainment properties and they sort of stay in that world. But it seems like you've really jumped around and everything from social impact projects to fintech and beyond. So I want to start at the beginning here. How did you get into the exchange game? Why did you have the audacity to start an exchange, and how did it go? Do we know about this exchange?
Yeah, so it was actually much earlier days, right? So we had started it before actually Binance was started, and at the time, the big players were really like Bittrex, Bitfinex, and it was a totally different game. And so when we looked at that, we saw very big opportunity, for an exchange that had altcoins and obviously Bitcoin, and then looking at emerging markets. So we were more interested in Southeast Asia as well as India. And so it was called Global DCX. We launched it, in 2017 and 2018. It continued, and then I actually exited though my position in 2017, end of 2017. And so,
good time to exit any position.
so yeah, I mean, it was maybe a little bit more luck than anything, but overall, pretty happy with it. And then it led us to, doing what we're doing now, which is pretty exciting because, we get to help transform the world and help push blockchain technology forward through, working with world-class entrepreneurs across every industry. And that to me is, very exciting. And so, you mentioned that I've jumped around across a lot of different fields. One of the things we look at is we're never the expert in any of the industries that we're in, right? So, when we're looking to back a company, we're expecting the entrepreneurs to have a lot of those connections, or us to be able to help mobilize and help find them some of the people that can help them do that. But we are looking for some sort of expertise and really strong understanding of the industry and the problems within that industry.
Yeah, I think that's extremely sage. And of course, Blockchain Founders Fund, it sounds like took shape in about the 2000 end 2017, beginning of 2018 era, which was, of course, the beginning of a very difficult time for investing in this industry. Can you explain maybe about your journey, maybe some highs and lows in the Blockchain Founders Fund journey, and what you think you've learned from that?
Yeah, absolutely. So, early on, so even before, when we were doing it kind of out of our own personal sorts of investments, we invested in a lot of ICOs, of course, across 2017, and that actually worked pretty well, to be honest. And I think it was about having some sort of discipline, and so we always have actually a more mathematical or straight line approach and how we exit positions over time with a lot of the coins that we had invested in. Of course, we still had a lot of positions that got hit really hard. I think a lot of people did, but I think we were maybe a little bit luckier on that front. One of the other things that I think was a little bit controversial, that we did in late 2017, is we actually came out against some of the ICO stuff that were happening and saying, hey, this isn't making sense. We're seeing a lot of the issues within the industry. And one of the big things that we looked at that I think, the industry still hasn't fully gotten, and it's a little frustrating to me, but I think they'll get there at some point, is this problem between governance of token related projects and the equity related holders. And if you think about, from a director standpoint, so with incorporations, there's obviously a director, and director duties are actually to maximize shareholder interest. And so the problem that we have with a lot of token projects is the director is legally obligated to maximize shareholder interest. And at some point, right, though, that coin and the maximizing of shareholder interest might go together, but at some point they diverge, right? Because there's a point where it makes more sense for the director to actually screw over token holders. And that's where, we had a big problem with it in 2017, and we still do. And a lot of the projects that we've seen since then, although they've slowed down a little bit, still haven't fixed that problem in reality. And so that, I think, also helped us. We got a little bit of criticism, actually a lot of criticism, I think, at the time, when we were like, hey, a lot of these token projects don't make sense. And people were saying, hey, well, you don't believe in this decentralized world.
Yes.
But I'm looking at this and I'm like,
How
a lot of
could
these
how
token
could you
projects.
question the will of the tokens?
Exactly. And you know how it was at that time, right? And so, I think one of the I guess funny things is most of these tokens are probably more centralized than decentralized, right? Than even if you compare them to traditional companies, I would say they're probably more concentrated in terms of power. They have worse governance overall. And so this was one of the problems. And so, I think we decided consciously to move to more equity-based plays. And so, between the two funds that we have, there's over 90 portfolio companies on the equity side. And so, we've been pretty happy with the way some of those have been progressing. Of course, some of the blockchain ones that had some sort of crypto focus, have struggled a little bit over that crypto winter. But some of them are starting to pick back up. But in reality, a lot of them are actually, I would say the vast majority of them did not have any sort of token components. Um,
Very nice. I mean, in the end, I sort of come at it from a very pragmatic standpoint, as I've spent, with my partner many years developing apps, websites, and games, and it's just really about the users, in my opinion, and who's speaking to the end users, and to me, that's what excites me. And I think that hopefully, with these winters, with more focus, like with the investment community on equity deals and stuff like that, you're just looking at great end user fundamentals and serving the actual users of these technologies. Who do you think is providing lots of utility in the blockchain space? Where do you see the maximal utility coming from, in your opinion?
Yeah, so I usually break it out into two ways, right? So you've got the blockchain side, then you've got, the crypto related side, right? And so if you think about, companies providing utility more so, I would say on the crypto side that are also, of course, using blockchain in some ways for the most part, you might see something like Brave doing very interesting things, in my opinion, right? Like what Brave's done with the browser. Obviously, there's a lot of people starting to use it. I mean, I think in reality, it's still very nascent, but clear traction, I think, on their part. If you look at what Dash is doing in Venezuela, actually, I was less than a month ago, I was in a call with one of our portfolio companies, and the CEO was actually in Venezuela and was just, very surprised at how many places were accepting Dash. And she was just like, basically everywhere accepts Dash. And that was pretty surprising to me, because you see different things in the news, but it's very different, obviously, when you have a source like that, really vouching for it. When you look at, for example, what VeChain is doing, I think it's pretty interesting. Obviously, the token itself, I think, has been taking a pretty big hit. But if you look at overall what the company is doing on blockchain, I think they're, if I'm not mistaken, have been around 1 million transactions a day, which is, pretty phenomenal across what they're doing. And that's because they've done a lot. They've been doing a lot with Walmart in China.
Well, it goes back to what you're saying, right? When there's actually some tension there, right? VeChain, the company, amazing. Partnerships, amazing. Marketing, superb, stellar, interstellar. But the tokenomics, does it make sense for the investor to hold that token? Again, we're going to see the answer, right? Because we don't know yet. It's early days. However, I think, that's sort of the deflationary feeling, or the deflated feeling, not deflationary. I shouldn't throw that word around in the crypto world, but that's the reason why I think a lot of investors have some frustrations, right? Because VeChain is, for all intents and purposes, thriving, but the token's getting hit repeatedly, and that's because maybe the tokenomics don't make as much sense as the actual overall business model. And that's something that you guys are seeing probably even more clearly on your side of things.
No, absolutely. And so you do see this quite a bit, right? I mean, in a lot of ways, these aren't correlated to performance, right? I mean, if you take, as an example, then on the blockchain side, right? If you take what Walmart's doing in China, which includes VeChain, right? So by the end of next year, Walmart is planning to have 50% of all of their fresh meat in China on blockchain, 40% of all their vegetables, and 12.5% of all their seafood sold in China.
Wow.
Like, that's staggering. And that's probably, in my opinion, one of the leading use cases around the world for blockchain itself. And a big part of that's already online. So it's not like an idea or anything like that. I mean, Walmart has clearly shown very successful track record on blockchain, right? So, I mean, you might be aware of what they've done in South America to North America with sliced mangoes. They've been able to take the traditional time to track through their supply chain from 7 days to 2.2 seconds, right? Like, this is phenomenal results that they've achieved. And so you see things like that, and it is frustrating, of course, then when you look back at like how that translates into the token. But I mean, I guess let's see kind of how things are going. And I think this, may also have to do with the governance issues that we talked about, and how Treasury is looking at things, not necessarily with them, but I mean with a lot of projects across the space.
To me, I was beating the drum. I think I was one of the main channels that would talk about supply chain and logistics cryptos, and the VeChains, the Walton chains, the origin trails, I had a list of 10 of them that I would love to talk about. And I kind of stopped that beating that drum because I wasn't seeing the translation. I wasn't seeing the buy pressure on the token. And I think that can be said of a lot of utility tokens. And that's because there's not really any reason for the token to be valued at any certain valuation. When retailers, for example, are just picking it up and dropping it and picking it up and dropping it, there's not really an attachment to a long-term speculation. And so I think it's an interesting time for utility tokens, and obviously the game is far from over. And there may very well be a few bubbles ahead with utility tokens included. However, I think it's very interesting, and certainly I've changed my tone on utility tokens like VeChain, talking a lot more about Bitcoin and things like that as far as speculative purposes. But yeah, it's nonetheless amazing and exciting to see that kind of efficiency where you could track down an E. coli breakout in seconds versus months, and we don't really know where it came from.
No, exactly. I mean, if you take the case of Chipotle Mexican Grill, right, in the U.S. in 2015, I mean, they had 42% decline in their stock price, like literally billions of dollars wiped out because they couldn't trace through their supply chain like quick enough, right? They couldn't figure out what was going on, and this is actually where blockchain makes a lot of sense. I think one of the big challenges, though, to bring up about supply chain and blockchain is you've seen a lot of these small companies that clearly have struggled. They never got traction, and the reason is because for supply chain to work, you actually need to get all of the suppliers on board. And so when a player like Walmart snaps their fingers and says, "Hey, 50 suppliers, you need to come on board," they do it. But when you've got a small player trying to do it, it hasn't really caught the same sort of traction. And so a lot of the smaller players have actually struggled quite a bit versus these bigger players.
Well, what's the beautiful thing is, as and you're absolutely right, but the beautiful thing about supply chain is a couple of big players can snap their fingers, and then
Mhm.
and now you have a new system in place. It's not quite the same. I guess it is somewhat the same in the banking world. If all the banks decided to snap their fingers, we'd have a new crypto economy. But there's a lot more reasons why they wouldn't do that. Uh,
With the banking one is, I mean, a little bit different. I mean, supply chain, I think, like, because of the capital investment and the number of players involved, like, I think it's a little bit different. I think the banking one is, to me, frustrating because with the existing banking system, in my opinion, it fails, right? So if you look at the fact that there's 1.7 billion people that are unbanked or underbanked, right? Um, the banking system's failing, right? I mean, how does how did, like, you essentially are saying that these people don't deserve access to bank accounts, credit, all of the sorts of things that we obviously enjoy in the developed world, and that allows you to propel forward, you don't have, right? And when you don't have these systems, it impacts everything from agriculture to education to everything else, right? And in your employment prospects and everything. And so these are clearly, I think, problems where decentralized finance and the trend that's happening is actually very fascinating, because even if the banking system changes, it's still missing the 1.7 billion people, which some people might say are at the bottom of the pyramid, but obviously collectively or in some sort of groupings have very big influence.
Yeah, and of course, we can never know what the impact of bringing water, electricity, internet, and banking to these off the grid members of our global society. What would the impacts be? Where would the next big innovations come from? And what would the overall impact be on the economies? Probably very positive. So there's no way to know until we do these things, but we can assume, you can make some educated guesses that it would be quite successful and positive. And yeah, of course, banking's missing out. We don't get it in America because there's 10 banks on every street. And so there's not an understanding of an unbanked citizen. But as soon as you go to other parts of the world, it becomes much more apparent what's missing, and you never really understand what it would be like without a bank account. But life is tricky without a bank account.
Yeah, no, absolutely.
So you work on a lot of social impact projects. Can you talk a little bit about your work using blockchain for good, and maybe what are the projects you're most proud of in that side of the blockchain work you're doing?
Yeah, so I mean, there's a number of things that flow into that. I think, like, from the education perspective, there's been different things across sub-Saharan Africa that we've done on the education side in the past. But I think a couple of things for me are very impactful. So one, we're actually helping to lead blockchain initiatives for INSEAD externally and supporting what they're doing. And I think when you look at education, in my opinion, it's one of the biggest pieces of empowerment that you can have to actually transform society. And so we're pretty excited what's happening with INSEAD, working on actually educating, the next generation of business leaders and business executives, because INSEAD is one of the premier schools globally for training corporate executives across pretty much many Fortune 500s and Fortune 100s. And so on that front, it's pretty exciting. But then what we're doing on the United Nations front is, very, very exciting. So as I mentioned, we're writing one of the flagship reports for the UN on emerging technologies. And what we're looking at is how, for example, technologies such as blockchain, cryptocurrency, machine learning, AI, and a number of other things can actually help to alleviate poverty. And so we break it down into different ways. But if you look at, like, say, the identity problem, there's 1.1 billion people in the developing world that don't have identities, right? And think about it. If you didn't have an identity, like, do you exist? I mean, in our realistically in our society, do you exist, right? You can't travel, can't get credit, you can't really get any sorts of services. Um, it's a
Can't buy a
disaster.
beer.
Yeah, I mean, it's a little crazy, right? And so, we're looking at how do you create identity systems, not just with blockchain. Blockchain is one part of that solution that ideally, brings that immutability function and that trust function in reality, or trustless, however you want to call it. But paired potentially with other technologies like facial recognition, which
Mm-hmm.
is good enough and spans across the globe now, and that's a different picture than what existed 5 years ago or 10 years ago. If you take, for example, land registries, this is a problem in a lot of the developing world because land registries don't exist.
Yep.
So how do you look at things like land title, or credit registries don't exist, or any sorts of other asset registries? And so one of the problems that you'll also see in the developing world is very common is if someone wants to actually borrow money, like let's say a farmer, right? They've got, a big farm, and they want to actually grow their business, which is something that's very common. You don't even think about in the developed world. In the developing world, you look at needing 200% collateral to your loan. So for every dollar you want to borrow, you need to give up $2 of collateral, or have $2 of collateral. But there's no registries, right?
Pretty untenable.
So yeah, it's basically impossible, which is very frustrating. So you have problems like this that we're looking at, bringing technological solutions in that can help to start, fixing some of these problems. And these are foundational things, and so a lot needs to be built on top of this. But looking at some of these things are very exciting. We're also looking at for example, central bank-based currencies. You've probably heard of synthetic hegemonic currencies. Mark Carney talked about it recently. Christine Lagarde's talked about it. You obviously have what's happening with the PBOC in China. So how would central bank-based currencies work? We're working with quite a lot of governments around this, looking also at trade currencies, regional currencies, special economic zone currencies, even things like refugee camp-based currencies, and having some sort of economy in these sorts of spaces. So it's
Yeah,
very
and it's super exciting, the identity work. Before we move completely off that, I definitely have gotten many tokens associated with health records related blockchains, and I feel like they're very much so tied together. Your blockchain identity, your health records, and sort of keeping a holistic control over the documentation that affects your life the most, and how we can update that for the 21st century. So I think that's amazing work. And then, of course, returning now, I do want to ask, how do you think? Oh, sorry, 1 second. I think the internet's reconnecting here. Okay, cool. How do you think that a central bank digital currency or a synthetic hegemonic currency should best be operated or spun out?
Yeah, so I mean that's a tough question because should best is kind of subjective to who's actually involved, right? And then you got to look at the practicality standpoint and whether or not central banks would be willing to give up tool sets that they have. And so
Well,
we're
that's really the question, right? Is printing money a tool set that they would ever be willing to sacrifice in any way?
and so realistically, I would say no. And that doesn't mean though that there won't ever be any sorts of currencies that aren't inflationary.
Mm-hmm.
And we're looking at it in a couple of ways, right? So if you think about the last century really of booms, I mean a little bit less than a century, but in reality, that's had a big part to do with aspects changing over time to allowing more inflationary aspects and allowing central banks to at least have tools to combat recessions. It's had problems, don't get me wrong, but if you look at economic development and growth over the last even 40, 50, 60 years around the world, I mean, how many people have been taken out of poverty in large part because of parts of these sorts of tools? So there is benefits. And I think people that say there's zero benefit to these things, I mean, I think don't really get the full picture and haven't really gone into a lot of the historical context of what's happened in the past. What my problem is that there's no way around this problem, right? So if you think about the US and the Fed printing, obviously, in continuous QE, Um, the problem is the US dollar is used for global trade. So it's actually impacting every country in the world when the US does this. And then the US is essentially the safe haven because there's really no other clear alternatives, I would say, still at the moment, in many respects. And so, you essentially move to T-bills when there's issues globally, right? Or US government bonds. Obviously, other government bonds are popular, but US government bonds are the most popular. And so this is where I think there's a problem. And if there's a way to move over to something that's not innately linked to the US dollar, because all of those instruments actually have risk to the US dollar. But if there was, for example, a layer on top, let's say a global trade currency that was non-inflationary, but you could hedge to that then. So when you wanted to hold that, you could, and all of the currencies against that would typically, I would say, likely depreciate versus that currency because that's not inflationary and not subject to political risk or wars or whatever else gets funded out of currencies. That would, I think, be particularly interesting as a sort of global trade currency, and it could be highly transparent within a number of central banks, probably not externally, realistically, but could be. I think that would already solve a lot of the global problems that you have with, the U.S. tightening currency and then loosening currency, and the impact that that has on emerging markets, especially
How
countries.
would you describe the difference between what you've just described there and a Bitcoin?
So I think there is some differences. A lot of people talk about Bitcoin as being the global reserve currency. Uh, to be honest, I'm not so sure that that will become the global reserve currency. I'm not saying that Bitcoin, won't start being held by certain central banks. We're already seeing it. I mean, Bulgaria, I think, is the first country in the world that had more Bitcoin than gold reserves. I don't know if that still holds with the current prices. Um, but the issue with Bitcoin is it is actually still fairly concentrated into a number of players, right? If you take the top 1% of Bitcoin holders and kind of how that's held, that's not really um, that's not really positive, I would say, in reality, for creating a sort of trade currency globally. Um, and so what we're looking at is how do you actually create a trade currency globally that's actually fair and doesn't start off with these sorts of major advantages to a number of countries, and doesn't have, say, the ability to get manipulated by a bunch of countries. And with Bitcoin, it already starts to centralize in reality, not from the technology standpoint, but from the holdings perspective. And then from the mining perspective, you can also see that there's clearly some sorts of centralization or a lack, maybe not of centralization, but a lack of expected decentralization, right?
Mm-hmm.
I mean, we saw this in the last few weeks with the
Yep.
drops in hash power. And so that's where I think there's problems with Bitcoin serving that role. But Bitcoin can definitely serve a role of being some sort of hedge still as an asset against global turmoil.
Apologize. Sorry. I'm
No
not
worries.
allergic to your Bitcoin talk. I promise. So question, do you believe that is it possible, right, to have such an international currency be done without mining, right? Because someone would then have to have pre-mined them. They'd be in some kind of common pot there. Is this come down to the G7 meeting or the UN meeting and deciding that they're going to create some kind of international trade currency? Like, what is the realistic approach to this if this were to actually happen? Like, it would probably have to start in one of those bodies, right?
Yeah, so this is where it's getting particularly interesting, right? I'm not sure it would be a mining currency because that would start to include a lot of infrastructure and other things for countries, and then realistically creates a disadvantage for a lot of the developing world again, right? Because I mean, in terms of investment into the tech, they're obviously going to have less or be left behind, and you end up essentially with the same sorts of discrepancies and problems from an accumulation standpoint. Where we see it being particularly interesting is, so Mark Carney, Central Bank of England,
Mm-hmm.
Less than a month or a month and a half ago, talks about the need for a synthetic hegemonic currency. Christine Lagarde's been talking about aspects around this for years in reality, and we had lunch, a little while ago. I met her in China, and pretty fascinating what they've done, what she's been doing, and what she's been advocating for. And there's talks about her potentially taking over the ECB, and so now you've got the Bank of England. Obviously, Mark Carney's leaving soon, though. You've got the ECB, potentially interested in this. Um, you've got China obviously looking at this. You've got and they've talked about it quite a lot over the last decade. You've got Russia interested in this, and you've got a lot of other countries that are probably and we know are frustrated with the U.S. dollar and the volatility of it and the printing of it and how QE is impacting their country, especially if they're pegged, but even if they're not pegged. And so we see potentially a number of central banks thinking about coming together and having a currency that gets created between them, but it can be open for other countries to join, and would be essentially a pre-mined currency, but there can be proper governance around it. Of course, there's always subject to manipulation, but I mean, this would still be, in my opinion, a vastly better system than what we have today as a layer on top of the existing system, rather than saying, let's replace the existing system entirely.
Well, this is certainly very exciting to think about, and especially as we plow forward into the brave future of blockchain. It's important to always challenge assumptions, right? And one of the assumptions that is, and I apologize for the background noise here. One of the assumptions has been that Bitcoin is so perfect that it will become both currency and gold. And I think it's important to constantly challenge those assumptions, even though Bitcoin, I feel like, does what decentralized gold should do very well. I think there's an argument that there's other use cases that it may never come to occupy, and it's important to realize that. I do believe that a decentralized gold is sort of what Bitcoin's shaping out to be, an asymmetric, a sort of non-correlated asset of sorts. And the idea that it would turn out to start replacing fiat currencies, I find to be a much longer term vision, and one that certainly from the tech side doesn't seem to be possible at the moment.
Yeah, like I think that one is more questionable. I think on the gold one, it seems to make a lot of sense. There's a lot of benefits, obviously, of Bitcoin to gold, right? And I think that's been it's an area where I think even Coinbase was saying that institutional inflows into Bitcoin were, I think, like 200 million a week is what they came out and said a little while ago. And that clearly shows that with a lot of the uncertainty that's happening, there are a lot of people moving towards Bitcoin. Obviously, a lot are also moving towards gold. But I think that will continue to gain strength on the Bitcoin side, especially because the gold one's a little odd. Like one, I mean, you can't really use gold
No,
in reality. Like if you had gold bars or bricks or whatever, I mean, spendability of gold is not that easy.
terrible.
Even if you had I mean, there's starting to be some cards and stuff on it, but it's still not that easy. And then even the other problem is when you have recessions, what I think a lot of people don't realize is gold production gets hit really hard, right? Because when you have recessions, capital tightens for companies, and gold companies obviously have a lot of loans and cash flow needs, right, for liquidity purposes, and that all dries up, and so then gold companies end up having issues. Therefore, they can't actually even take the gold out of the ground, and you'll see a lot of gold companies end up with issues every recession, right? I mean, it's standard with every other company.
Sure.
And so this is also kind of interesting, right? And so there's all these other kind of inefficiencies that you have related to that gold industry when you do have downturns, which gold is supposed to actually be very smooth sailing through, but it isn't in reality because of the company nature.
Well, irrespective of the jewelry aspect, we just don't know how much gold there is, and we never will. And according to Elon Musk, gold's as common as sand in the universe, and we could very easily in the next 40, 50 years tow an asteroid close enough to mine it, and all of a sudden gold becomes like water. And so that's sort of, maybe that's a little bit science fiction, but at the same time, I do believe that that's the biggest problem with gold, is that we just don't know how much there is, and it's impossible to value an asset when you don't understand the supply. And I think that with regards to Bitcoin, that's just the one thing it does very, very well, is you know how much of the total supply you have, and that's a beautiful thing.
Well, a good thing to think about on that is, like, it has been proven the amount of gold on some of these asteroids, and it's through the roof compared to say like global gold supply, would have a very big
Hmm.
impact. And so whether you think it's 20 years, 50 years, 100 years, 200 years, 500 years, at some point that equation hits where supply dramatically increases because we figure out how to asteroid mine, right? So it's not a question on if, it's a question on when, right? And so
Agreed.
it is very interesting on the gold front.
So I'm going to bring it back to a little more of a cookie cutter crypto talk here now. Do you think we're in a new bull run?
A new bull run. It's an interesting question. I mean, clearly we've seen Bitcoin get much stronger over the last, I would say, 6 months or so. But you do have altcoins that haven't really, picked up. Even things like Ethereum have struggled. And so, I think overall, though, I think sentiment is better for blockchain and crypto. You look at what's happening with the trade war, you look at what's happening with the potential recession and inverted yield curves, and those things are clearly positive. You look at the reports coming out of institutional investment into blockchain, or into well, blockchain is a separate thing, but into Bitcoin. That's also looking pretty positive. And so I do think that there's a lot of upward pressure, and overall, we are probably in some sort of bull run. That doesn't mean it can't correct. But overall, I think the outlook over the next 5 years looks pretty positive to me, with a looming recession.
So, what do you think is different if you were to categorize this as the nascent sort of early stages of a bull run? What do you think's changed? What do you think are things that are going to be completely different than the 15 to 17 era?
Yeah, so I mean, I think one very strong pressure is there's clearly an acceptance now of Bitcoin being some sort of alternative, right? I mean, some people obviously still disagree, but there's a lot more talk of it. There's a lot more investors okay with that. There's a lot of institutions saying, okay, let's try it. There's a lot of central banks holding it now or looking to hold it. And so even if it's not much, but this sort of mentality shift is very different from 2017, right? And so I think with Bitcoin, that's clearly a case. I think Ethereum itself, given that it's the strongest, say, like ecosystem to build on right now, also has a pretty positive case in reality. It's the one that, I guess, arguably, or maybe not, you can't even argue, I guess, has the strongest developer communities as well. Um, and so, from that standpoint, I think those two are pretty strong. With a lot of the altcoins, it really depends, right? Because those are still companies. And if capital tightens up with a recession, a lot of those companies will probably still get impacted pretty negatively. And if consumers stop spending or tighten spending and they're consumer facing companies, that will get harder, right? Businesses on B2B businesses will tighten as well. And so when you're looking at a lot of this stuff, that gets impacted. And so those aspects will still be challenging, and I'm sure a lot of those companies will continue to fail through a recession.
So, altcoins will be a little less exciting potentially on this next bull run if you were to make a blanket statement.
Well, yeah, I mean, especially with the assumption of a recession, I think the companies itself will struggle, a lot of them.
No company will be freed from the grips of the recession. Only completely decentralized assets like Bitcoin and maybe Ethereum will start to see some excitement because of the way that they are just kind of native assets of the internet now that don't necessarily respond to any single entity's contribution.
Yeah, I mean, I think that's part of it. Obviously, there's probably some others in there that would do reasonably well, but overall, I mean, if consumers are tightening spending and therefore they're buying less, so like a lot of the products would have consumers like needing to spend, that tightens, right? And so that
Yep.
makes it even harder. If businesses tighten spending, that means less pilots, less integrations, less B2B deals, right?
Yep.
And so this tightens. And so on that aspect, businesses across the board get hit pretty hard. The decentralized finance stuff, has some potential because there's opportunities in different markets, and so there's obviously different things that can still succeed through a recession, but it does make it much harder for a lot of the companies.
So what's the climate like for a VC in this world right now? What are people talking about? What are the exciting points, and what are the things that people are weary of? What is it like to be trying to allocate capital in such an uncertain time?
Yeah, so I mean, I think with so it depends. I think it depends on where you're putting money and what sorts of opportunities, right? We have been thinking more about recession aspects, and so profitability starting to become more and more important to us. So companies that we can see a quicker path to profitability, we know can survive, even if, say, capital tightens and it's harder to raise, your next round. But if you're a company that has 8 months of runway and then you're going to be losing $5 million a year and you can't raise your next 5 million, well, that's a problem, right? Because even if you have a good business, um, you would go bankrupt in that case, right? And so this is the problem when you have this tightening of capital. So we've been more conscious of that in certain markets, especially where we see recession more likely and things starting to tighten. When we look at China right now, we're actually seeing a tightening of capital. We're seeing it harder for companies right now to raise, which I think the rest of the world hasn't seen yet. They haven't really been hearing much about it, but we are seeing that on the ground in China, that it is getting harder and harder and harder. And I think that will have some big impacts around the world. When you look at certain companies that we can see very clear value and the ability to not have these sorts of astronomical costs, those sorts of companies, we can see probably still have good potential, right? It's harder, I think, for B2C businesses, though, for sure, when you have very big very big cost of acquisitions and like per consumer,
Mhm.
or per user, and then you can't really calculate your customer lifetime value very easily, and you don't have the time to really enjoy that because of this looming recession. So these are some of the things that we're starting to get concerned about. I mean, we've still been deploying capital very actively, but conscious of these problems and very much looking at companies that can get to profitability sooner.
So, I mean, yeah, and as you were saying, obviously, and I try to remind the viewers of the channel, because it's so tempting to talk about the imminent crumbling of the U.S. dollar and the entire global economy. But I am a believer that things happen a little slower, and that these flashing indicators might still be canaries in the coal mine of things 1, 2, 3, even 4 years out. And yeah, we obviously time will tell. But what would be your most exciting investment that you have allocated capital to in 2019?
Yeah, so there's been quite a few, right? I mean, there's some on the blockchain space, some on the non-blockchain space. I mean, given that you're in the US, I'll tell you about a non-blockchain one first, and then we can go into some blockchain ones as well, and we can talk about some trends. But um, a recent company is a company called Jonton. It actually just launched the lowest cost health insurance in the United States, and so $15 a month, unlimited telemedicine, unlimited prescriptions for the entire family. That's pretty game changing.
That's amazing.
And you can get prescriptions from anywhere from CVS, Walmart, pretty much anywhere across the country, all 50 states. So we're pretty excited about that, especially given the problems with health insurance in the United States.
Oh yeah, I mean, health insurance is an absolute nightmare, and everybody knows that. But beyond that, really exciting, the concept of telemedicine. A lot of times you just want to talk to a doctor. A lot of doctors can do things visually, diagnose things visually, and yes, a lot of doctors will say, "Oh, I need to touch you," and to know. But there's quite a few use cases for
I
not
believe
needing.
it's about 80% of everything can be done just as effectively through telemedicine. So
Great
pretty
statistic.
high rates.
Yeah.
Um, and another actually interesting trend and recent company that we invested in. So social commerce has been taking off in China.
Hmm.
And so we invested in a company called Yumi, which is a social commerce platform, where also it's one of the fastest ways to create a WeChat mini store for merchants. So in 10 minutes, you can start selling in China. Very interesting. And then there's a lot of social aspects to that, which is very interesting. Um, in terms of the blockchain space, on the loyal side, we had a recent investment into a company called Keyless. They've been doing fascinating things on, you know, um, optimizing the experience for sign-ons, for wallets, and for exchanges. And the next part of what they're doing is essentially completely getting rid of all sorts of passwords, and it being fully, so even private keys, things like that, can be fully trusted through them with not to them, but using your facial recognition or other sorts of biometrics, and just leveraging the power of the blockchain and splitting this up essentially across the blockchain for security. So things like this could be very fascinating going forward. I mean, there's a number of other really interesting companies on the blockchain side. There's a company called Rapids working on creating mass adoption for crypto. So we're very interested in that. They're one of the top wallets in Southeast Asia, and now they've got the ability to not only buy crypto with credit card, but top up your mobile anywhere around the world. You can buy Grab credits, like taxi credits, essentially. You can buy online shopping through Lazada, things like that. So some pretty cool things that they're doing there that we're excited about. So, I mean, there's definitely a lot of progress, but still a long way to go, I think, for the industry to move forward.
Yeah, very interesting. And obviously, to me, when you're talking about using biometrics to replace passwords, it kind of comes back to the conversation we had earlier about identity, medical records,
Mhm.
and what are the things that are uniquely yours that no one can ever counterfeit. And that would be, or at least now for the moment, they can't counterfeit. Would be the fingerprints, the eye scans, the retinal scans, the different biometrics that we can use to validate our own identity. And then that really opens up so many opportunities for things as simple as account passwords to as deep and personal as medical records. So I think that's really interesting stuff, and obviously, undoubtedly the future. Very cool stuff. So now, what is the worst investment that you've made in your entire career in blockchain and cryptocurrency? What is the one that you want to go back and slap your hand off the computer and say, "Don't buy that"?
There's definitely been, I think, quite a few of these. I would say it probably goes more so back to ICO days. I'm just trying to think of which specific company. I mean, there's quite a few, I think, that have got hammered, really, really hard. Actually, I'll tell you a funny one. It may not be the worst one, but I think it's a more entertaining one. We had pretty big holdings in Walton, which you mentioned earlier, and I remember there was the time where I think they posted from their own official account that they had won the Walton competition prize, right? Because the person that managed the account was also the person that ran a company
Ooh.
that won the prize. And that I remember, I think,
those days.
yeah. And the price drop was astronomical, but it's stuff like this that
Astronomical.
you're just like, there's
I thought that was a bit of a silly overreaction by the market as well.
I don't think so.
No?
No, I mean, I think governance at the end of the day is one of the most important things to protect everyone. I
Gotcha.
mean, without any sorts of governance and ethics, I mean, you will lose, right?
Yep.
If the other side doesn't have that, and so I don't actually think it's no reaction.
So Walton sunk themselves with that contest.
I think that was the start of I think a nail coming into that grave. But I mean, they're still kicking. But I'd see kind of how they continue, and hopefully they turn things around. But I think VeChain itself has had a lot more progress in China since then.
It's certainly a lot better at explaining their progress. They're very good at communicating their strengths.
Yeah.
So I guess you're an expert investor. What would you want to impart upon the audience, and sort of wrapping up and giving some words of wisdom that people can take with them as they try? A lot of people are here to try to earn financial freedom. A lot of people are sometimes new to the investment world. This might be the first type of investment sort of category that's got them really working on investing and understanding and analyzing investments. What would your advice be to the sort of average crypto investor on how to navigate these waters?
Yeah, so I mean, on the crypto side, like I do think it's quite challenging, right? So one, obviously be very cautious, make sure that you're only investing what you can lose in reality and that you would be comfortable to lose. And be aware, especially if you're looking at altcoins, of governance issues and intentions of the company, and also question whether or not the solution really make sense. And one of the best ways that we look at this is just being very realistic. I mean, is this solution realistically simpler than the non-blockchain solution, right? Because from a consumer standpoint, you're looking at actually creating consumer value or consumer surplus. If you're actually looking at enough mainstream adoption for it to make sense. And in most cases, I would say a lot of the blockchain solutions make it much more complicated, add much more friction, and that in reality won't succeed, right? Like if you wouldn't use this product because it adds 2 minutes to every time you try to make a payment, I mean, no one else is going to be using it, right? Realistically. And obviously some of this stuff gets better over time. Obviously you have to look at, how technology will progress, but this is something that I think is very key. And so, this is a technology that is going to change the world. I mean, blockchain comes with the ability to solve, the way that we look at it is solve a lot of issues with human trust. And, this is revolutionary technology. I think it's already proving that way, but a lot of these companies will fail, and just be very wary of that. While we're kind of moving on to this revolution, there will be a lot of failures, but there will be a lot of successes.
Thank you so much, Ali from Blockchain Founders Fund. Your wisdom is very much so exciting, and thank you for your time. I really appreciate it. I know the audience will enjoy this, and thank you very much.
Thank you.
Well, I hope you enjoyed that. I know I certainly did. A big thank you to Ali Madhavji for coming out on the show. If you guys enjoyed this episode, throw a like and leave a comment in the comment section below. As usual, I'm Elio Trades. You're watching FUD TV, and I'll see you very, very soon on the next episode.